Today's episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. FS specializes in training and keeping their experts up to date on the latest trends, practices, and technologies. So you'll be able to keep your farm in the best shape possible. Visit fssystem.com to learn how FS is bringing you what's next and find out all the great sources and resources that they have that's online at fssystem.com. And welcome into Market Talk for this Wednesday, June 30th. Great to have you here with us again, brought to you by our friends at Growmark FS. I'm your host, Jesse Allen. Thanks for joining us. MarketTalkAg.com. That's our home on the web, MarketTalkAg.com. Find us there with all the great information we have for you, including information on today's USDA numbers. As I tell you what, very, very interesting day, a very big day in the trade. Let's waste no more time bringing our good friend Mike Zuzolo with Global Commodity Analytics. And Mike, good afternoon to you. And I got to say, the reports today lived up to the hype in the respect of they were a market mover, Mike, and they were a market mover in a big way. Before we dive in specifically, what's your overall thoughts on the numbers we got today? Because I believe they came in pretty close to your pre-report estimates.
Yeah, and the corn they did, Jesse, and I think this is where one of the biggest surprises, even for me, was that the USDA did not rob Peter to pay Paul in the form of taking corn acres away from beans or vice versa. They took corn acres away and bean acres away from trade expectations. And so that was one of the outliers in this report that fortunately my data and some of the analysis, and my analysis is really rooted in what the clients tell me and the subscribers tell me when I speak with them. And it's all anecdotal as far as the acreage base goes. Other than that, there's not a lot to go on. It's not like you can build a true model like I do with the national yield, but with the acreage base, it really goes back to producers. And I think that was one of the biggest things that I saw, was that we've had this situation where the funds have been able to play corn against beans or beans against corn. I don't think they're going to be able to do this, because you could argue pretty easily the soybean acreage number was even more bullish than the corn, even though the biggest surprise initially for the trade was the corn acres being well below 93 million acres. I just couldn't see it getting above 92.5, let alone 93 million, because of what I was being told, and also because of the economics of planting. And it showed up in some of the acreage maps that USDA showed us.
Well, all right, Mike, let's pull up the full chart you sent me here of those numbers from today's reports, and I'll let you kind of go through this. And you mentioned a few of those on the corn side, and you mentioned the bean side as well. A little bit interesting there, being maybe a little more bullish, but talk about some of these numbers that we saw today.
Yeah, I'll call your attention to the lighter numbers at the very top, the first 5 rows of numbers. Those are all pre-trade guesses from back in March, late March, that Reuters put out. And what you notice, and this is kind of what I was pinging off of as far as where the market was weighing one way on one side of the boat or the other, notice the highest trade guess way back in March was 94.5 million corn and 91.6 million beans. And so there you already had an idea by the trade that you were going to come in heavy on corn. And if you took any corn acres away, they were going to go straight into the soybeans. I think that's one of the biggest things that maybe the trade kind of didn't realize. Even the USDA Outlook Forum, when we had that in February, USDA came in and said, no, wait a minute, guys, we're going to be at 92 million corn and 90 million beans. No one took that at face value. I did take that at face value, because when they come out that early with those low numbers, it kind of tends to, in my opinion, keep the trade, keep the analysis and the statistical database more balanced. And so that's why I came in at 92.3 on the corn. USDA came in at 92.7. I came in at just under 90 million on the soybeans. And that was actually down from my March estimate of 91.4. USDA came in and said, no, we're still going to be 2.4 million acres less than what you're saying, Mike. And I think this is a key point here, Jesse. For a time, as I said, I think the beans and the corn are going to rally together, and you're not going to have the beans sold and the corn bought on the spread as aggressively. But I do think that's going to be the very lowest bean acreage number we see in this spring. And as we go through the crop year, I think that number will creep up.
I know on the wheat side, with all wheat, we were a little bit higher than expected, but overall, not too much higher. I know one thing that I thought was interesting was abandonment for spring wheat was only at 3.5%, and I know that's not on this chart, but there's a lot of folks that are thinking that number is going to be a lot higher. Maybe it's just too early to tell, Mike.
Yeah, that's exact. I'm so glad you brought that up because I didn't want to get too deep in the weeds unless you wanted to. But that's exactly, if you look at my orange number for other spring wheat of 10.7 and my Durham number of 1.34, I think that's exactly where these soybean numbers are going to come into a greater size. And you'll probably see milo and canola and those types of more drought tolerant crops, maybe less costly crops come into play as well. But that, you hit it on the nose. That spring wheat market still has a lot of information to be brought forward, I think.
All right, well, let's shift over, and I know you sent the maps from the USDA here. Let's look at corn planted acreage first, and that was again where the trade was initially a little shocked. You look at this map, Mike. What do you see? What stands out to you that we need to really look at?
The biggest thing that stands out are the three states right in the middle of the country, and looking at their acreage base dropping so dramatically. And this is compared to their last estimate. This is compared to the March forecast, the survey that the USDA put out. And I think this really begs the question as to whether we can get a 179 or 179.5 yield. I just can't get there. I think we talked about that last week. I think today's acreage numbers really draw the attention to the yield at this stage when you look at it state by state like this. The other thing I'd say, Jesse, is look at the concentrated increase in acres in Minnesota, North Dakota, and South Dakota. I mean, you're talking about 16 and another 6. You're talking about over 22 million additional acres versus what they were 22 million additional acres and what they were thinking back in March. That is the heart of the drought. So I think your harvested acres and your yield are wide open right now, and these next 10 days in that part of the country could really drag down your national yield. And I talked to several clients in Nebraska this week. They were blessed with some 1 to 2 inch rains. It's going to give the corn a chance to get down and find the nitrogen, get some roots available to it. But it's going to need it because in central Nebraska all the way up to Sioux Falls, South Dakota, the forecasts are calling for next to no rain and highs a week from today about 96, 97 degrees. And one of the guys I talked to near Grand Island, Nebraska said, I got 8-inch beans right now. They are not going to be doing well if we get that kind of a forecast. So here again, I think that the USDA numbers, as you dig deeper down, not only do they call into question the acreage base, but they call into question the yield. And then that feeds back into what the South American crop looks like.
And we'll talk that South American crop in a second. Let's flip over to soybean planted acreage and looking at these numbers. We thought about the incentives early on to plant corn versus beans and all that, and now we're kind of getting a snapshot of that. And looking at this map, what stands out to you? I see a few things that maybe stand out to me, but I'll ask you first.
Yeah, I want to hear your thoughts too. So I'll keep this one brief. To me, Jesse, this is where it shows up because, again, since it's against March versus now, and given that the high cost of production in corn, I was surprised at how many reductions were being taken place in the Western Corn Belt in particular. The Ohio and Indiana numbers and Wisconsin numbers don't surprise me because those were areas that were very, very wet and probably did not get the beans planted like they wanted to. But the Western Corn Belt areas were a big surprise to me.
And that was where my surprise was too. And I'm thinking, Mike, that, early on we were dry. We weren't really worried about the rains. So I think a lot of producers switched over to corn in Minnesota, South Dakota, Nebraska, Kansas over soybeans. And I think that had to have contributed to the reductions. And I think maybe North Dakota, the reason you saw an increase there was just because it was so dry then that a lot of producers decided against spring wheat early on in favor of beans. But I think you saw that early growing season. I think or the early planting season and the dry planting window. I think a lot of producers went to corn for that reason alone.
I think that makes a lot of sense. And I think if you couple that, if you just isolate Minnesota, the Dakotas, and maybe a little bit of Wisconsin, I think you can also start talking about the high cost, the high cash price of spring wheat in Durham. And I think we did pull some acres away from soybeans into the spring wheat. and into the durum initially. And I think that's where I'm going to be very tender-footed about what we talked about as far as how much spring wheat and durum acres go over into soybeans, given that soybean map that we just looked at. But I still think the point's still there, that we had some acreage either torn up, because I know for a fact clients and people I was talking to up in those areas were tearing acres up of spring wheat and going into soybeans. What will USDA be able to capture here in the coming months is the big question.
Well, looking at Wednesday's market closes, a little bit higher moves in corn, about a dime away from limit higher moves in soybeans, and strong gains in wheat futures as well. Spring wheat was almost 45 to 50 cents higher, it looks like, here at the close. So, judging on what you see at the close here today, obviously be interesting to see what we come in with on Thursday, if there's any correction overnight, or if we continue to rocket this thing higher. But the bullish reaction here, what are your thoughts for producers here as they look at these numbers now heading into July?
Well, I've conditioned the clients and subscribers to really be on point for hedging soybeans this past 6 or 8 months, in preference to hedging corn. So a lot of calls have come in today and they said, okay, we're up 90. Should I start hedging some beans now? If you haven't, I think, yeah, you start, but you don't do it too aggressively until maybe the end of the week. Well, let's see what the drought monitor shows. Let's see what the agriculture and drought report shows on Thursday. The big thing right now, Jesse, that I think the market caught up with, if you were an analyst like me, the first thing you did was drill down these acreage numbers and then toggle around with the yield. If you take USDA's 50.8 bushel yield nationally for soybeans and just knock a half a bushel off that, you're sub 100 million bushel carryover for this coming year, using their 4.42 total demand number and using their same 135 carry-in number. Grain stocks report would suggest that maybe we could trim that beginning stocks number a little bit, that carry-in number a little bit. But this trade has got to realize we're going into the July 4th holiday with potentially sub 100 million bushel carryover. And then you start talking about South America and that issue down there, where they had some pretty terrific freezes in some key areas that the trade thinks it's mainly corn. But my colleague and my source down there got back to me this morning and talked about how China is looking to revamp their quality standards at the WTO, at the World Trade Organization. They're in the process of doing that. And some people he's talking to down in Brazil right now are very nervous about this freeze impacting the quality or the ability of the Chinese to take a lot of beans from Brazil without maybe having to blend them with United States beans. That's still a big question mark, but it's still something very, very crucial to talk about and to think and keep in mind when you're talking about hedging beans.
And just pulling up a picture that you got from your colleague there in Brazil, looking at some of this frost, and that's definitely another overlying issue that we are hearing more and more about. And I've heard some people say, "Oh, it's not that big of a deal." Well, when you're talking an already stressed safrita corn crop down there, and then you add frost on top of it, that's going to compound the situation, Mike.
Yeah, I think the worst case scenario is Western, from what he's telling me, and he sent some other pictures that we just didn't have time to share. But you can go ahead and sign up for a trial on globalcomresearch.com, and I'll send you his special report that he sent me with all the pictures. There's also pictures of other parts of that Paraná province, Jesse, that was tasseling. And so what he was talking to producers that he knows in especially areas like Western Paraná, they're saying they're going to get about 30% of their normal yields in their corn at this stage, between what you just said, the drought, and then this hard freeze. Again, we went below 32 degrees in areas of the Mato Grosso and Paraná, and Mato Grosso do Sul, I should say, in Paraná. So it's really key. And there's more frost freezes on the way heading into the weekend.
Well, Mike, looking at everything today, and a wild day in the market trade, it's been very interesting. And of course, we haven't really even touched on the U.S. weather. And it seems to, think now that we got these numbers in, we're going to turn around. We're going to get to this weekend. We're going to look at these updated forecasts, but it's kind of the haves and the have-nots. We've seen all that rain in the eastern Midwest, dry in the western and northwestern plains. Iowa's right in the middle, right at that pivot point, so to speak. And moving into the 4th of July holiday and past that, kind of setting up the same. We're setting up hot and dry in the northwestern plains. And I think, depending on what we get for a forecast, we're really going to have weather shaping us here moving forward. And of course, then we have the July WASDE numbers coming up, and but to factor in all these numbers from today into the July numbers.
Yeah, well said. Supply's falling faster than demand. We cannot get a yield number yet. I am going to stay, if these weather models hold correct for the what I call the golden triangle of Iowa, South Dakota, Minnesota border. If that area continues to miss rains and get as hot as these forecasts are calling for, I'm not going to be able to go above 175 on corn yield, and I'm not going to be able to go above 50.2, 50.3 on bean yields. And so you're talking about a 100 million carryover on soybeans, and you're talking about a 1.2 billion carryover on the corn. And yeah, USDA can start trimming demand, but that's what the function of the price. Keep in mind, we lost a lot of price this last 2 weeks, and that's part of the reason why the market jolted higher after these numbers came out, because they realized we've got to ration that demand. Here's the key to me, Jesse, that if you don't take anything else away from our interview today, the July-September spread between the corn is still a $1.20 premium to the July futures. Big ethanol producers on both sides of the Mississippi River jumped their basis levels to $1.05, $1.10, even $1.20 over the September contract when they rolled their cash spot basis from July to September, because we're now in delivery in July. So it is suggesting, and today's report, both the acreage and stocks report, all of them are suggesting the July price in futures is closer to being correct, because that's the cash price out there in the countryside, than the September futures price. So this next 10 days could be unbelievably volatile, and especially if the July corn really wants to stick it and go north quick to ration demand more quickly. And it should carry the September with it. So if you don't take anything else away from this conversation, do not do anything but puts right now. Get your floors locked in at the appropriate time, scale up, sell. Don't wait for a high and then try and catch that falling knife like you did back in May or early June. Get your puts in place, roll them up, and don't sell any cash until we get maybe 15, 20 days down the line.
Mike, real briefly, we didn't say anything about livestock yet, which, of course, grains were the star of the show and the focus today. But I didn't really see anything in cattle or hogs that surprised me. Feeder cattle were weaker with the sharp rising in corn, but live cattle and hogs were mixed. Anything between cattle and hogs that jumped out to you?
Yeah, 134 D's futures on the fat cattle, Jesse. I still like hedging. I got the National Restaurant updates and looked at them briefly before we went on. We're coming back around pretty nicely, but these meat costs are gone too high too fast, and we're hitting a 6-7 year high in gasoline prices at the retail level. So don't play with fire, in my opinion, especially if the corn market's going higher. We really got to pull these dress weights down. So I still like hedging the third quarter and fourth quarter cattle at the right price. Feeders have a gap below them in the August feeders. I would think that'd get filled pretty quickly if the corn keeps going higher. I will pull hedges or recommend pulling hedges once I fill that gap in August, and probably just go flat the market at that point, because the cash feeder market remains very, very stout. It'll be interesting to see, because this is going to be one of those years where if the corn keeps going higher, it's probably going to drive the hay, the forage, the alfalfa prices sharply higher with it, because of where these droughts are happening out west, up north. Maybe only Oklahoma and Kansas could maybe get away with not having to see such sharply higher prices in their cash feed and fodder prices. But the rest of the country that's got a lot of livestock, especially cattle, they're going to suffer on the feed costs. Lastly, we saw in the report, and pretty much all week this week, the power of the funds through the pork and bean trade. When the beans went up, the hogs went up. Didn't have a fundamental reason to it. When the beans went down, the hogs went down. Didn't really have a fundamental reason to it. So keep expecting that pork and bean trade to work until China stops buying our pork.
Mike, great insight as always, and always happy to have you on a big report day like today and every Wednesday when you join us. And I know you have a lot of great information for folks they could check out on your website, globalcomresearch.com. And that free trial is very handy, especially on a day like today.
Yeah, I think so too. And Jesse, you do a great job. Thanks for having me, sir.
Mike Zuzolo, appreciate the time as always, my friend. And check out his website, globalcomresearch.com. Sign up for that free trial. Mike Zuzolo with Global Commodity Analytics, our guest today here on Market Talk, brought to you by GrowMark FS. I'm your host, Jesse Allen, wishing you a great afternoon.